Let's start with the definition of a mutual fund. A mutual fund is an investment vehicle that pools money from multiple investors and invests it in a diversified portfolio of stocks, bonds, or other securities. The fund is managed by professional fund managers who aim to generate returns for the investors. Now, let's move on to the top 3 tax-saving mutual funds in India. Axis Long-Term Equity Fund. Category, ELSS. Objective: to provide long-term capital appreciation and save taxes under Section 80C of the Income Tax Act. ICICI Prudential Long-Term Equity Fund. Category, ELSS. Objective: to generate long-term capital appreciation and save taxes. Mirae Asset Tax Saver Fund. Category, ELSS. Objective: to provide long-term capital appreciation and save taxes through investments primarily in equity and equity-related securities. These funds have a track record of delivering consistent returns and are popular choices for tax-saving purposes. However, it's important to conduct thorough research and consult with a financial advisor to understand if these funds align with your financial goals and risk tolerance. Remember, investments in mutual funds are subject to market risks, and past performance is not indicative of future results.